and I'm a lawyer turned real-life investor, best-selling author, and the CEO and founder of the ProfitProphet Trading Group in Silicon Valley. And in this video, we are going to analyze NIO Stock and find the best EV stocks to invest in using the powerful tools, concepts, and resources professional traders and investors use in the real world. The goal is to maximize profit and minimize risk, and the ProfitProphet checklist lets our firm do just that. Find tradable, profitable stocks by deploying the most important trading and investing tools and factors. So, welcome to the ProfitProphet X, where you will learn how real-life traders and investors make trading and investing decisions, pounce on trading investing opportunities, and grow and manage world-class stock portfolios. Hit the subscribe button and click on the notification bell to make sure you don't miss any of our content. All right, let's get into it, stock traders and tradettes. In general, the two biggest factors for determining whether or not to consider trading a stock are price trend and candlesticks. Now, there are other factors on a trading checklist, but not all of the factors have an effect on what stocks to trade or invest in. Rather, they help us answer other questions, such as when to buy or sell a stock, or how much of a stock to buy and sell. So we're going to analyze NIO stock and see if NIO or one of its competitors may be a better EV stock to consider trading and or investing in. This is what we call an eye test. All right, let's hit the two biggest factors on the checklist: price trend and candlesticks. All right, first up is price trend. We want to find stocks with a history of positive stock price movement. That is, the stock price gradually moving higher and higher over time. That's because most people consider that the longer the time frame we look at, the more reliable the signal given. So a good way to think about it is to picture the ocean. The long-term trend is the tide. The intermediate or primary trend are the waves. And the short-term trend are water ripples. Power lies in the tide. Tides move oceans, not waves. Therefore, the long-term trend is the most important subcategory within the trend category, accounting for 4 out of a possible 7 points. Let's take a look at NIO's stock chart. The long-term trend generally encompasses about 1 to 3 years of share price movement. Now, if the long-term trend is negative, in other words, it's a downtrend or even a sideways trend, for us, the stock does not have a track record of success. The risk is high and the profit potential is low. No bueno. We generally move on. Now, if the long-term trend is something we can work with, in other words, a bullish uptrend, we move on to the intermediate trend analysis. All right, here is NIO's stock chart. As you can see, NIO had its IPO in September of 2018. So there's not that much share price data. Also, we see a pretty much parabolic rise starting in, when was this? July of 2020 until now, December 2020. So instead of looking at the weekly interval candlesticks, we're going to look at the daily so we can get a better reading of the long-term trend. All right, so to chart the long-term trend, we want to find the pivot highs and the pivot lows. For pivot highs, we're basically looking for a price point where the candles hit and then pivot to the opposite direction, basically making like little mountaintops. So look at the chart. We see the price rising, and there's a pivot high here, 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 and here. So we go up to the toolbar and drop an upper trend line on or along the pivot highs. There. We do the same thing for the pivot lows. Areas where share price is declining, stops, and begins to move in the opposite direction. In other words, rise. And we find those here, 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 and up top. All right, having found the pivot lows, we now want to drop a lower trend line through or along the pivot lows. Come to our toolbar, get our arrow, and there's a pivot low here, here, here. And so there's 3 pivot lows right there. Now, we didn't place the lower trend line through the upper candles because we really don't know if these candles are a pivot low. These candles formed over the past week, and we don't have a definitive decline in share price followed by stop and pivot to the opposite direction, i.e. rise in price. Instead, there seems to be somewhat of a consolidation, possibly even a bearish flag. You see share price decline from that top and begin to consolidate or trade within that narrow range. Now, should share price break through the bottom of that triangle, the lower right line, we would expect to see an accelerated decline in price to where? Most likely that lower trend line. That being said, at this point in time, there's really no way to know whether that area of candles is a pivot low, a pivot high, a consolidation, or the formation of a bearish flag. So we don't know if it's a pivot low. Meanwhile, these candles down here, we do know that they're pivot lows. It's historical data that shows share price declining, stopping, and then rising. There's a track record there. There's consistency of share price hitting on or near this lower trend line and bouncing back up. So until these most recent candles form or develop a definitive trend or direction, we can't really rely on these candles when plotting the lower trend line, at least for the long-term trend, as much as we can rely on these down here. So we place the lower trend line through or along these pivot lows. To put it all together, yes, NIO is in a long-term uptrend. Yet I wouldn't call this an ideal long-term uptrend. We don't see that nice steady increase or rise in share price over a significant period of time. To me, it seems more of a parabolic rise in share price over the last few months, resulting in a clearly ascending upper trend line and a more questionable lower trend line, sideways even. You could even make a reasonable case that the upper and lower trend line are beginning to diverge at this point. Be that as it may, we find enough elements of a bullish uptrend to label NIO's long-term chart as a flawed long-term bullish uptrend and move on with our analysis to the intermediate trend. Now, because we found the long-term trend to be a flawed bullish uptrend, we award NIO 2 points for the long-term trend subcategory, and we move on to the intermediate or primary trend subcategory. The intermediate trend spans approximately 3 to 9 months of share price movement. Here we find the intermediate trend lines resemble the long-term trend lines, and that may as well be attributed to the parabolic move in share price over the last few months, resulting in a steep upper trend line and a nearly sideways pointing lower trend line, spanning from June/July 2020 to December 2020. Consequently, we also find the intermediate primary trend to be a flawed bullish uptrend, resulting in 1 point out of a possible 2 points for the intermediate trend subcategory. And we move on to the short-term trend. The short-term trend covers the last month or so of share price movement. We see NIO was in a short-term bullish uptrend from October 2020 to December 2020. Now that uptrend was broken into December, but that isn't necessarily a bad thing. For momentum or swing traders, a pullback, a gradual decline in share price over a very short term is a buying opportunity. In general, we consult the short-term trend for when to buy or sell stock. The long-term trend, and to a degree the intermediate trend, is consulted when deciding if to buy or sell stock. Now, ideally, as a momentum swing trader, I want to see a bullish candlestick reversal pattern at the bottom of the short-term trend. Consequently, we move on to the Japanese candlestick category, which follows the trend category on the checklist. But first, we allocate points for the trend category. NIO earned 2 points for the long-term trend, 1 point for the intermediate trend, and 1 point for the short-term trend, for a total of 4 points out of a possible 7 points for the trend category. Alright, on to candlesticks. Now, the trend stage we use for the candle category is tied to your goal for the stock. Do you wish to execute a short-term trade, an intermediate-term trade, or long-term trade? For long-term, we would look at 1 week candles. Each candle would signify 1 week of share price movement. For short-term and intermediate, we would most likely just look at the daily candles. Each candle would signify 1 day of share price movement. Before you is the long-term trend, consisting of 1 week candles. And we find a bearish engulfing formed at the top of the trend over the last 2 weeks. Now the trading week just started. I'm looking at this chart on Monday, December 7th. So we see this week's candle forming to the right of the bearish engulfing. It's a small green candle, but we cannot rely on that small green candle as it isn't done forming. We're still within the week. So we focus on the 2 candles preceding the bullish candle and keep an eye on the chart to see what happens with the small green candle. A bearish engulfing is a bearish signal, signaling share price may decline in the coming days and weeks. At our firm, we have a database on performance and reliability of individual candlestick reversal patterns. And a bearish engulfing correctly signals a short-term decline in share price, 79% of the time. It's a pretty reliable signal. However, the decline in share price is usually short-lived. It's not that powerful of a bearish candlestick reversal pattern. Rather, it's more accurate than powerful. In essence, meaning that, yes, share price does decline a bit, but it's usually not that big of a move down. Nevertheless, a bearish engulfing pattern scores -3 points for frequency and +1 point for performance on our checklist, which is a total of -2 points for the candle category out of a possible +8 points. So that was for the long-term trend. Now, some of you may want to execute a shorter trade in time. Therefore, you may want to look at the shorter term, i.e. one-day candles, candles representing 1 day of share price movement. And we see some promise for the short term. We see an imperfect piercing line bullish candlestick pattern forming from December 1st to December 2nd, 2020. Now, after a couple of bearish candles on December 3rd and December 4th, we see a bullish candle form again on December 7th. The bearish candle on December 4th and the bullish candle on December 7th form a tiny or imperfect bullish engulfing. The two bullish patterns are positive signs of short-term increase in share price. That is the piercing line we saw a few days before and the bullish engulfing we have now. Yet there are imperfect bullish patterns. Now, the bullish engulfing pattern signals a bullish reversal about 65% of the time, and it's one of the more common candlestick patterns, ranking 12th out of 100, earning it the maximum number of points allotted for the category. Subcategory. As for performance, the bullish engulfing is our baseline standard. The pattern ranks 50 out of 100 in overall performance, earning it 1 out of a possible 5 points for the performance subcategory. In sum, the intermediate or short-term traders should award NIO 4 out of a possible 8 points for the candlestick category. To sum it up for the candlestick category, we would want to see a gradual rise in share price. In other words, more strong green candles with greater volume on green candle days, positive days, as opposed to down red candle days, negative days, before we would even consider relying on the bullish engulfing pattern or any pattern, as a matter of fact. It very well may be a false bullish signal. Now, it has promise, but we need confirmation. And the reason I say or see potential here isn't even necessarily because of the candlesticks or the trend per se. It's this $40 level. See how the candles keep touching that level over the last month to 2 months? Well, if that happens enough times, if the candles go up and touch that bottom but never actually break that line, that $40 line, that could be a very strong support level, which is a great opportunity or place to enter a trade. Now again, it's early. I would want to see share price test that level at least a couple more times. Share price hit the $40 level and bounce back up without ever actually going through or down to a lower level, below the $40 level. Should that happen, we may have a bottom or support at the $40 level. Essentially a price below which the bears or sellers have trouble driving the price below because bulls or buyers see that level as a buying opportunity, overpowering the selling pressure from the bears. And that would be reflected also in the volume, which, like I stated before, if we see green candles with great volume and red candles with less volume, then that tells you that the buying pressure is higher than the selling pressure, which would reinforce the bull's argument or thesis that the $40 level is a bottom or support level at which to buy. It would also serve as a form of confirmation for those bullish engulfing patterns that we saw, the piercing line and the bullish engulfing, giving us more reason to actually act on the bullish reversal patterns. All right, we've just covered the first two categories on the checklist, and we already have quite a bit to unpack before we proceed with the other categories on the checklist. So the early stages of our stock analysis or technical analysis reveals a quasi-bullish story of hyper growth over the last year. Yes, it's not an entirely convincing bullish story. There are bearish signs and signals in the chart. Many chartists and technical analysts are staunch believers that the data, share price, paints the most accurate picture of a stock's health. Everything is reflected in the share price. And I believe that is quite true in this case. An eye test of the EV industry as a whole shows two stocks are in a league of their own in terms of profit potential: Tesla and NIO. And headlines are driving share price, most evidently NIO share price, because we find two convincing and more importantly opposing narratives here. One bullish, one bearish. Together, equally convincing, competing storylines. And those headlines fall in two camps: financial headlines and political headlines. On the financial side, there's the fight for market share within the US and in China. Tesla versus NIO. And second, we have political headlines. The US versus China. The Chinese government versus mega cap Chinese companies. The US versus Chinese companies. Domestic regulations and international regulations. The effects of a Biden presidency on EV and renewable energy. The uncertainty surrounding Democratic or Republican control of the Senate and the impact either party would have on renewables, EV stocks, and trade tensions with China. These headlines play out in the share price, bullish signals intertwined with bearish signals, resulting in ambiguity and uncertainty in the near and even distant future. There's simply a lot to unpack here. So, if you liked this video on NIO stock analysis and want to find out more in part 2 of our Insider NIO stock analysis, hit the subscribe button now, for in part 2, we will cover the storylines and headlines in play here with NIO stock, its effect on share price, and determine if NIO and or Tesla is a surging EV stock, an incredible profit opportunity, or a risky cautionary tale of loss. Alright, let's get into it, stock traders and tradettes. I'll see you in the next video.